Oh boy, you guys, I really hope you're hedged. In today's video, I'm just gonna cover a really quick overview on CPI and just kind of what I think is gonna happen going forward. Let's just take a look at CPI right now. So CPI year over year, this came in early this morning. It was at 8:30 a.m. Eastern Standard Time. We were expecting 8.8. As you guys can see, we actually got 9.1. So that's actually really bad, you guys. Now, let's take a look at the month over month. So month over month, we were expecting 1.1. We got 1.3. Now, this is also really bad, but I think that we actually peaked out on inflation. Now, I actually say this somewhat confidently just because what I'm seeing right now is a pretty big drop in gasoline prices, and we're also seeing this in the stock market as well. We're actually seeing a lot of these energies like the XLE fall significantly. Let me just show you guys some of these gasoline prices here. So I'm going to show you guys exactly why July CPI for June was absolutely horrible. So here we could see retail average gasoline price. And this is coming straight from the EIA website. So here you can see in May, we're seeing like $4.62, $4.59. But all of a sudden in June, we saw a massive spike. We went from $4.87. We even hit $5. Then we went to $4.96. And then we actually had a little inflection to the downside. Right around $4.87 is where we closed this month out. So right here is essentially June's gasoline prices. So I would say that this probably averages right around 4.9-ish. So yeah, I would say like 4.9-ish was kind of like the average. So now we have 1 week's of data for July. Now, July retail gasoline prices was 4.77. Now, this was just for 1 week. We're going to get more information on this in the coming weeks. In the next few days, we should see an update here for 7-Eleven oil prices or gas prices. Yeah, we'll definitely check in, see if that fell or if it's right around the same level or if it actually increased. But right now, I'm kind of in the mindset that we did basically hit peak oil prices. So, another reason why I'm saying that is because I'm looking at the short term energy outlook. This is a report that comes every month by the EIA. The last report, they were actually saying for Q3 that they were forecasting retail national gasoline prices to be right around $4.27, I believe it was. So now they're actually giving us full year forecast, and they're even giving us next year's forecast as well. So here, if I kind of zoom in a little bit for you guys can see on this little panel right here that they're saying that WTI crude oil for 2022 is averaged to be right around $98.79 per barrel. And for 2023, they're actually expecting this to come all the way down to 89.75. Now with Brent crude oil, we're expecting 104.05 and 93.75 for 2023. Now, gasoline, we're expecting the full year's average for 2022 to be $4.05. Now, for the first half of the year, we actually averaged about $4.11. So if they're expecting $4.05 for the entire year of 2022, then they're expecting probably Q4 to be significantly lower, maybe in the $3 range, like in the high $3 range to get this $4.05 average. Now look here in 2023, they're expecting this to come all the way down to $3.57. So here for diesel, we're looking at $4.73 for 2022 and $4.07 for 2023 is the average. Now, I do believe that this could potentially happen because let me just go over to Webull and just kind of show you guys what's going on with XLE. So if we're looking at the energy sector ETF, look at this massive sell-off. I mean, I do believe that the stock market is also forecasting that gasoline prices are going to fall. And that's why we're seeing this massive, massive sell-off on the energy sector. Notice that just about every other sell-off, we had buyers quickly stepping in. But now we literally crashed. This is a massive crash right here. So are we going to have buyers stepping in this time around? So as you guys can notice, we're actually on the 200-day. We bounced off this 200-day moving average. We're about to come right back down to this 200 moving average. Now, if we break below this, that's going to be significant because the next area that we're going to want to look for is this 50-day moving average on the weekly time frame. That's going to be 6402. If we do break below this, I think that it's pretty safe to say that the market is forecasting lower gasoline prices. And basically, those earnings that are coming from these massive oil companies are unsustainable at the moment. So that's going to contribute to a massive sell-off here because investors know that the earnings that they're seeing right now in these massive companies is not sustainable. They're having a great time, but eventually that punch bowl is going to get taken away. So let's just look at the commodities futures real quick and just look at Brent and crude. So if we're looking at crude and Brent right here, I mean, crude is all the way down to, what are we at right now? Let's just go ahead and click it. 95.56. Now, I remember this went all the way up to as high as, gosh, I believe it was like 120 or something. Let's just take a look at this chart right here. So if we're looking at this chart, let's just zoom out. Yeah, we literally peaked out. Where is that? Yeah, we peaked out right here, as you guys can see. That was like 130. And then we had another strong rally that went all the way to 124 on WTI futures. So yeah, you guys can see that, now we're kind of fading pretty hard on oil futures. So I do believe that this was the peak. This was right around that Ukraine war time. So this was like peak fear on oil. So now we're definitely significantly lower from this. I mean, we were at 130 a barrel. Now we're around 96. So I already kind of see signs that oil prices are going to go down. So I do believe that this is the peak on CPI, and I believe in August for July, we're going to see some sort of inflection. And the one thing I do want to caution you guys on is by the end of this month, we're going to get so much data. So imagine if we get the worst outcome. That's going to be high CPI, which we already got. It's going to be a bad preliminary print on GDP, which is going to say that we're in a technical recession, potential nasty earnings on mega caps, and last but not least, oh boy, it's going to be that 75 basis point interest rate hike. So if we combine those four things together, then July is going to be an absolute whammy. So definitely, I want to caution you guys that, if all four of those things happen, we could be in for some serious pain in the markets. So I hope you guys enjoyed this video today, and I hope you guys stay safe today. I mean, safe trading.